Welcome back to Chart Wizard Trading. Going to talk about the bearish alternatives. Last video posted last weekend had the bullish interpretations, and now I'm going to talk about the bearish interpretations of those oh so important markets. We're going to start with the S&P 500. 2 videos ago, 3, something like that, something in that range, I had an S&P 500 specific video, and I had to change that count slightly just to move a label. That was all I had to do. I had these internals counted slightly differently, which invalidated when price exceeded somewhere around here, 5,600 or something like that. Okay, but it just requires a label change. That's it. You can there's the correct number of requisite waves here, and we just needed to move them around a little bit. That's all. So for the bearish interpretation, okay, this is an interpretation assuming the end of something. Okay, something very big. Now it's just 5 waves up, just like it always is. Okay, 5 waves up with an extended 5th wave. Okay, 1, 2, 3, 4, 5, perfectly legal. 4 does not go into the price territory of wave 1. 3rd wave is not the shortest actionary wave, and it has 1 extension, that being the 5th. Okay, now this also extended. Okay, this final 5th wave also extended. It could have satisfactorily have been counted here. It just kept extending, which is fine. It's allowed to do that. Okay, little label shuffle around, but we have the right number of waves here. Okay, you can count it even on this time frame. You can see them all. They're all there. 1, 2, 3, 4. Okay, and this is all 5. Whoops, I went too far. Sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. Went too far on that because I didn't put the internals on there. Here, I'll temporarily put the internals for the extended 3rd somewhere around there, inside of there. All right. Change the color. Dun, dun, dun. What are we? Degree here. Micro degree. Sure. Okay, and that's the internals for the extended 3rd. So 1, 2, 3, 4, 5, 6, 7, 8, 9 to finish it. Okay. Extended 3rd within an extended 5th. And this has this wave here has 2 extensions in it. Okay, and that's the most you're allowed to have by rule. Like, you can't keep going with 2 extended waves in a wave, right? Can't do it. That being with 2 extensions in it, you can't continue that way. All right, this has to be the end if this labeling is correct. Okay. It's a rule. Max 2 extensions, that's all you can have. All right, which makes sense for a blow off top, and that's fine too, from the bearish perspective. Again, if you're the type of person who only thinks things go up, you're going to be mad at this video, go watch my last one. You'll be a lot happier, but you should pay attention to this one because it's all valid price action. Even on a small time frame, it looks very imminently complete. Come down like a 15-minute time frame or something like that. Right, very imminently complete in what appears to be possibly an ending diagonal here. Just like that. Little ending diagonal to finish it, and we just poked a new high today. All right, so that suggests this being a final wave. You got 1, 2, 3, 4, 5. Okay. Got the right requisite number of waves there. I mean, you can go this too, right? 1, 2, 3, 4, and then start it from there if you needed to, right? It's all there. It's all requisite number. But anyway, the contracting price action like this typically signals an ending diagonal, no matter where you want to start it. And it should start rolling over here, right? Right? Now, what degree it's rolling over is yet to be determined, okay? But as this count suggests, it's the final one, okay? If you want to see a different interpretation where this isn't the final, this is just a top of a third wave of some degree, then you're only going to get a retracement back to around here and then continue on, right? But that we're not talking too much in detail about that this video. We're just talking about the bearish interpretation in which it won't stop there. You'll get a little pullback and it's going to run. All right. Sentiment-wise, it's beyond absurd. I will say that. Okay, beyond absurd sentiment out there. As far as what there's the bullish attitude that it just can never stop, and that's just wrong. I'm sorry, it is. Like, it definitely can stop, right? And that could be now. So my job is out here to analyze, not to, be a degenerate. This is what the chart is saying. This could be a top. Okay. So there it is. We'll have to do a lot of proving, right? Because we do have a long-lasting trend here, and the trend is your friend, but it's going to have to do some proving. And the first thing it has to prove is to break that around 5,000. Okay. Break that. Pull back. Break it again, and we're going. All right. That's how you change trends. That's what happens. So that's the S&P 500. On to the Dow Jones. Okay, you take all of these counts into consideration when deciding, well, what is the next appropriate thing? Now, this is an important development here in the market is this triangle, okay, in the Dow Jones, which is now big enough to contend with this as a partner leg, right? And you see a clear 5 waves there off of this low. 1, 2, 3, 4, and post triangle is a thrusting movement up that ends and will quickly turn and be completely retraced as fast as it went up. As fast as this went up, as fast as it's going to get retraced. Okay, when it does turn, it will turn quickly. Okay, 4th wave triangle, 5th wave thrust, which should be super short and tiny compared to the first wave, right? Maybe it doesn't feel tiny because it's just a moonshot, but look at it. It is tiny. Okay, guys, cover your ears. Talking to the ladies out there. It's tiny. Not even close to the size of wave 1. You usually want an impulse parity, right, between the 1st and the 5th waves. Okay, if you don't have an extension, right? If the 5th wave is not extended, then you're looking for 1-to-1, right? Which a 1-to-1, well, that would be in. Oh, I am in linear. Okay, very good. So in linear, 1-to-1. Is way up around almost 45,000, right? Just short of 45,000. We aren't even close to that. Not even close. Okay? Because that's what a 5th wave following a triangle should be. Okay? It's either real short or it's very super long and extended. Super long and extended. Okay? And we're going to find out which one it is. But super long and extended would assume that it's much longer than this. Much longer. Okay? Twice the size of this at least. of this wave one. Again, if you want to see the bullish interpretation, go check out my last video. I'll move on to the Nasdaq next. Now, in the Nasdaq, kind of the same thing as the S&P. They do have similar assets inside of them, so none of that is strange. But again, 5 waves off the low with an extended fifth. That's it. And an extended third and fifth wave inside. Now this one I think is probably already done. If we come into a low time frame here, 15-minute time frame or whatever, right? Now these, when you place these labels, they don't always hold up as well on the small time frames, but right, you could get one more thrust on this, very close to being done or done. Okay, because this is where you run into like interpretation issues, right? So you have this, but then you have this, right? So you have to ask yourself the question, because you have the overlap, right? Is this all 5, or is this part of something smaller? Okay, it's fully retraced, so whatever this was, we know is done. It's wave 2 rule. Then we know that's done. Okay, but we don't know if that's done. So this could be, another triangle working itself out, and then you get a one last thrust in the Nasdaq, or it's already all donezo, right? We're not quite sure on that yet. But the recipe's there. I mean, there's not much more to this. You already have 2 extensions in the wave. So whether you think it's a 3 or you think it's a 5 or whatever the heck you think it is, doesn't really matter in the short term, because you can't have more than 2 extensions in an impulse. You can't have it. Can't be done. It's against the rules. Okay. Bullish or bearish, we are at a near-term top imminently. Okay. Define imminently, I don't know, a few days, a week. It's already done. Something in that range. Okay. But we're in the latter stages here. So this is the Nasdaq composite. Go back to the bigger time frame. Okay, and they're all like that. They're all in their latter stages. Russell. Okay, now this is kind of a big development here, that this broke this high, right? But we have another very similar thing going on here. I'm going to take this to candles. Another similar thing going on here that you did with the Dow, okay? In that you have this post-triangle thrust, right? This 4 is labeled, I don't have the labels on there, but this 4 is a triangle. I could put the labels on it. A, B, C, D, E. 4th wave contracting triangle. Okay. This is, and you have an extended 3rd wave. I could put those labels in as well. 1, 2, 3, 4, ending diagonal 5th for the 3rd wave. And then in total, 1, 2, 3 extended, triangle 4, 5. The important thing about triangles is they only occur immediately prior to the final actionary wave degree. Okay, so if you see a triangle, whatever happens next, it's the last thing. That's it. Same thing with the Dow. Whatever happens next is the last one of that degree. It's all done after that, and it will be completely retraced. Okay? Same thing here in a Russell. Triangle, whatever this is, it's the last one. It's about to be done. Okay? It will turn on you. I promise you, it will turn on you and take it out. All of this will be completely gone. Now, that doesn't mean it's the end of the world. Okay, this is the bearish interpretation. The bullish interpretation is that all of this is a first wave. okay? And then you're just going to get a moderate retracement and then continue on your merry way. So you don't have to freak too much out. I'm just saying that whatever this is about to be done according to this interpretation, okay? And I'll move on to Bitcoin. All right, the bearish interpretation for Bitcoin. I have two bearish interpretations. This is one of them. This is, actually I have this. There's another way to count this, okay? This is one, I'll show you a couple different ways. So on some of the leverage charts, this low here where this orange 2 is broke, okay? All the spot charts held it, but in the leverage chart it broke. So it might not be the best. You can come up with the same spot with a slightly different interpretation, okay? So what you can do is get rid of that, and you can move your 2 here as a flat instead of 1 2 1 2, right? And then you can say, there's a couple different ways you can do this. You can say that's your 3, that's your 4, and that's your 5, and it's all done. Meets all the rules. Okay, 4 doesn't go into price territory 1. 3 is not the shortest wave. Blah, 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 blah. It all meets all the rules. Okay, and that this is 1 2 1 2. Okay, this would be a leading diagonal first, a second wave, impulse for a third wave, and this is part of an extension then, 3 4 5, right? To which the internal to that would be like this. 1, and then we're just finishing the 2 now. 3 4 5 for the 3, and I'll go ahead and change the color of that and the degree to make it a little more clear. Okay, so that would be 3 4, and you would get your 5th, and that would all be 1. Okay, and then that's going to start. It's turning now, right? Because you have 3 waves up already. Here, we'll zoom in on it so you can see it. Boop. There we go. All right, so there's my labels. You see whenever I zoom in on time frames, got to readjust the labels. Okay, but you have 3 waves here, and it's just a regular old stinking zigzag. We have A, B, C. Okay. Now we don't have 1-to-1 between A and C, and we don't have, and it's not channeled. Come on, man, get out of here. Okay, and it's not channeled. Okay, but what we can argue is alternation and complexity. A being a contracting leading diagonal. B can be whatever the hell it wants to be other than 5. Looks just like a regular old zigzag. And then you have an impulse here for the C wave. So alternation between a diagonal and an impulse in complexity for a zigzag. All right, which then goes right past the previous 4th degree like it's supposed to. Okay. If an impulse labeled as such, expanding leading diagonal 1, zigzag 2, impulse for 3, a zigzag for 4, and an impulse for 5. Okay, and I'll change the degree on that. I'm getting kind of small. Don't worry about the degrees. They don't have to be correct. Obviously, it's probably not sub-micro degree, but as long as the degrees are different, right, that's all that matters. So impulse down meets all the rules, right? 3rd wave is not the shortest. 4th wave does not intercede on the price territory of wave 1, and you're good. This being an impulse here, I know some people are going to say it looks like a zigzag, but it's not a zigzag. I've explained this on a couple videos, I think. Oh, maybe I didn't explain it to the public. I will explain it to you. Okay, so we essentially have 3 guidelines for a zigzag. Okay, if you're going to then say that this is a zigzag, okay, despite what it looks like to the naked eye, okay, you still have to meet some guidelines here. You have 4 guidelines in reality for a zigzag. That is between 1-to-1 between A and C. Okay, so I'll just throw some preliminary labels up here. boop, boop. All right, if we're going to say that that's a zigzag, right? Preliminary labels, and then you check the guidelines, okay? So we're looking for 1-to-1. So you measure out, and to avoid confusion, I'm going to go ahead here and turn off these ones. Okay, and so that's my 100% extension of A. It greatly exceeds that. All right, so we don't have that as a guideline. The next thing you want to check is time. 1-to-1 in time. Can we get 1-to-1 in time between A and C? The answer is no. 1-to-1 in time ends here. C wave greatly exceeds 1-to-1 in time, so we don't have that as a guideline. Next would be channeled. Okay, that the three waves are channeled. And you draw your channel like this, A to B, and we can see that C greatly exceeds the channel lines. We don't have that as a guideline. The only thing you have left then is alternation in complexity, which is what I described here. One wave is differently complex than the other. All right, and in this we can consider alternation in complexity between A and C, but this we cannot. It would just be two impulses. Right? They're not even more intricately subdivided or anything. It's just they're just two impulses. And when you're dealing with it just looks like two impulses, then it's probably an impulse. Okay? and then you can see that you can get that out of it. Okay? So you can go 1, 2, 1, 2, 3, 4, 3, 4, 5. Okay, impulse. It just so happens that this second wave is the kind of the biggest correction in this whole thing, but also consider this whole thing happened over a weekend. Okay, so if you take out the fact that it was a weekend and you just went sideways in a corrective manner, then likely if it happened during the week, it would have been much shorter in duration. But regardless, that's an impulse there. Okay, it meets all the impulse rules, meets all the impulse guidelines. It does not meet a correction guideline. It does not meet any zigzag guideline at all. So it's not a zigzag. This one, however, does. Okay, this fourth wave zigzag. It's channeled very nicely. Okay, definitely within the confines of a parallel channel. Meets that guideline. You only need one, and you got it. So, fourth wave zigzag, no alternation, but that's not a rule, and it meets all the actual rules of an impulse down. Okay. The only question is, did that impulse down end something or begin it? And the point of this video, if you want to see the bullish version, go see my last video. If you want to see the bearish version, continue watching, because in that case, this is all done. Your second wave has come slightly past the end of the previous fourth wave. All right, we probably have a pretty good retracement too. Probably just beyond 50, maybe 61.8, something like that. Let's see what we got here. I actually haven't looked yet. So, oh yeah, it's just beyond 61.8. So, that looks pretty damn good too, as far as the second wave retracement goes, and you have 3 composite waves. So it's all good in the hood. All right. 1 down, 2 back. In that case, here we go, baby. Let's rock and roll. Let's party like it's 1999 or 2000. Remember the stock market bubble? It's a very similar thing happened after the stock market topped in 2000, the tech stock bubble. Very similar thing. All the bulls came back, and and they got wiped out. So don't say it can't happen, because it definitely can. All right, so bearish interpretation here, 1, 2, and here we go. It's all done. My members get to see this first, by the way, so you won't see this probably until it's already either invalidated or well on its way. This is going to be a weekend video, and I believe it's Tuesday now. So I might drop it Thursday or Friday. We'll see. But members get to see all this great stuff first. Wavecounts.com. And this month is the last month that I'm offering monthly memberships. Also the last month that I'm offering an annual membership for only $250. And you can keep that price if you decide to join forever. For as long as you want to stay an active member of Chart Wizard Trading, you get to keep that price. I will never change it on you, ever. Not once. I'm never going to change your price as an active member. New members, yeah, you're going to get a different price. So if you decide that you like my analysis and you want to see even more detailed analysis, daily updates, consider a Chart Wizard Trading membership. And the important thing about Chart Wizard Trading is not just my personal updates, which are just my opinions. It is you then can learn to do this on your own. Okay. I'll preface this now. I don't want anybody in my Discord that is just going to be a degenerate when Lambo. Okay. Looking for calls. It's not what my Discord is for. If you're just a call guy, don't even bother. I don't want you there. I want people who want to learn the Elliott Wave theory, apply its rules and principles, participate in the community discussion, better themselves as an investor and or trader. That's the type of people I want in my Discord. I don't want degenerates. So if you are a degenerate and you know who you are, if you are Win Lambo, do not join Chart Wizard Trading. It's not for you. Okay. Making that clear now. It is not for you. It's for people who want to be invested in themselves. Now, that being said, I'll explain a couple more options here for Bitcoin. So we have that as an option that a 5 finished a while ago, and we're 1212. Okay. Get rid of these small time frame counts here. There's another option that gets you kind of in the same place. It just erases one of the degrees. All right. So you can have 1, 2, 3. Let's see. How did I have that? 1, 2, 3, 4. 5. I had all of this as a 3. Okay. Let's get rid of that. All right. And that just assumes that this is the smaller degree 2 here. Instead of being internal to this smaller degree 2 is actually a larger degree 2. Okay. That's all that means. Okay. And the reason we say that is because at least on this time frame, and there is a way to make it in a smaller time frame, which I've explained many times to my members, that this appears to be 5 waves. Okay. And we all know a B wave can't be 5 waves. So the only other alternative to that is a triple zigzag. Right? You have a WXYXZ as a B wave from that last count, right? Or any bullish count rather. That this is a triple zigzag and not 5 waves, right? Because that's the only way you can get a B wave out of that. It has to be corrective. You can't have an impulse as a B wave. But it could also be an impulse, right? You have 5 waves. So that's what we're talking about here. But it would be a truncated 5th wave, which is important. This would be your 4, I'm sorry. Which is important because that would signify a major top. It's the only time you're going to get a truncation, right, on this size scale is you just top something majorly. And that's what this count suggests. You have topped Bitcoin at that point going all the way back to 2009 when it first started trading. Okay, this is the top of all tops. Okay, well, that's my dog in the background. He likes Elliott Wave too. He really liked that top. That's why he barked there. So, and my dog's a good predictor of things. But yeah, this would be a double zigzag here. Instead of a leading diagonal, most diagonals like their alternates are going to be double zigzags. Like that's what you would get out of it is a double zigzag. So the 4 is a double zigzag, 2 is a flat, and that gives you alternation between 2 and 4 and a fifth wave truncated top and 1, 2. Same argument I just made. You got 1, 2. Impulse down, 2 up. That is now complete. And we're on a merry way, baby. This is 1, 2, baby. And this thing's going to rock and it's going to roll. Nope. Lost my marker. Rock and roll. Right over. Okay. One more alternate observation, though. All right, from a bearish perspective. Let's say that this is not complete. Let's say this is going to turn into an impulse, and it's not. What we see as ABC is just 1, 2, 3. Right? We come back down to that hourly time frame. Right? We made a case for ABC, but we could make every ABC, every impulse starts 535. Zigzag is 535. Every impulse starts as 535. Right? So this could be 1, 2, 3. Right? Could be. Right? It could even be, depending on how many subwaves we get, which we're not sure yet. There's another interpretation that you have 1, 2, 1, 2, 3, and you're putting in a 4, and you're going to get your third here. 4, 5. Okay, you'd want that to be a little taller if from the bearish perspective here. You want to make a new high with this. Okay, so beyond, what did we have here? 73.7. You want your fifth to poke above that. Okay. All right, and internal to that, all right, is now this instead. We're borrowing from the other diagonal, and we have 5 waves here. 1, 2. That's a third. Come on, that's a third. You're putting in a fourth now, right? This probably wouldn't go too much further beyond that, right? You're looking for just near the terminus of the previous fourth wave, so somewhere around there. You get a fifth for a 3. Boom. Get another 4, and then your final 5. And I can bump up this here to be a higher degree so you can see it more clearly, right? And that would be an impulse, okay? Now what I'm going to do is I'm going to turn on the waves of that and then zoom back out to the daily. Boom. So back here I am back out on the daily, and then you can see one more possible alternative here for still a bearish count. Boom. And then, like I said, you got your triple zigzag here in your B wave. So then this is 535. Zigzag. You still retain your alternation with the flat and the zigzag. And then what do you have here? An impulse up. Yep. But it's the last one. Boink. Sorry, guys. The last and final. Fifth wave. And then you get 1, 2, 3, 4, 5. And that's a 1. And then everybody'd be like, the bull market's back. Oh, except it isn't. Yeah. Okay. So bearish interpretation there. There's 3 different interpretations. All of them are fine. All of them are legal. We're just going to have to see what happens in the short term here, right? We need something to happen. So if this continues down through the remainder of the week, and especially if it took out this low, but we'd know before that. If it starts even getting down to, 59, 58,000, we'd know that one of the 2 previous interpretations before that is the accurate one. Okay, so there it is for Bitcoin, the bearish interpretation, to contrast with the bullish interpretations that I put out a couple of days ago or last weekend. Consider it. Enjoy the rest of your weekend or your week. Have a good one. Thanks for watching Chart Wizard Trading. I'm out.